very few of us can actually set stop losses and take profits which are based on market volatility, which are appropriate to the current market conditions. And so that's what I'm actually going to talk to you about today. It's not about, I'm not going to talk to you today about, what to trade. I'm not talking to you about, trading opportunities. We do plenty of webinars about trading opportunities. And I'm sure in the next week or two, we'll be having more webinars about those kind of things. Today is purely about the exit levels, the stop losses and the take profits. So the first graph I'm gonna go to on my screen is a graph of Euro USD. Okay, and I'm actually going to scroll down to my graph here, which is movement per hour of day. Okay, now if all of you don't know where to get this information, you can log into the Autochartist web application. If you have a login and a password on our website, you can go through there, or you can launch the web application through your MetaTrader or other means. Sometimes some brokers allow you to get into the web application through their website. It really all depends. If you're struggling to get into the web application that I'm showing you right now, then you need to drop us an email to support@autochartist.com, and we'll with the name of your broker, and then we'll guide you as to how to get into the web application. So what I'm showing you right now, the graph in front of you, is really the essence of everything I'm going to be talking about today. This graph shows you the expected price range movement for every hour of the day. Okay, so right now, let me get my pen. Right now, we're at about 2 p.m. London time, and my Autochartist is set to Europe, London. So we are expecting, on average, this hour for Euro US dollar to trade around 20 pips or so. Okay, that's on average. Within 67% probability, which is what we call in statistical terms 1 standard deviation, we're expecting the price of Euro USD to be somewhere between 15 pips and 26 pips. Okay, let's go over that again. So right now at 2 p.m. London time, we're expecting Euro USD to trade in the range somewhere between 15 pips and 26 pips. Now, that I'm not giving you direction, right? I'm not saying it's going to go up or it's going to go down. Right? I'm saying how many pips we're expected to move in the next hour. Now, you can see that an hour ago at 1 p.m., we could have expected it to move much more. The volatility would have been much higher. That's because during the US Open, right, which was a little while back, about 30 minutes ago, the volatility of Euro US dollar obviously spikes up. Okay, so compared to now, an average of about 20 pips, to an hour ago, an average of around 25 pips. And in the next hour, we're expecting the volatility to be around 24 pips on average, right? With a much higher spread, not the highest spread, but a higher standard deviation, right? So a much bigger range within which it can move. Now, why is this important to you? This is probably the most critical piece of information that you will encounter in Autochartist from the point of view of setting stop losses and take profits. Because some people come up with trading strategies, okay, and they decide for some reason unknown to me that they want to trade, let's say for example, Euro USD with a 10 pip stop loss. Okay, so what does that mean if you choose to trade Euro USD with a 10 pip stop loss? Let me erase all these items. With a 10 pip stop loss, which is over here, right? If you're trading during London time between midnight and 6 a.m., right, there's a likelihood that if you trade with a 10 pip stop loss, your trade will only will close within the hour that you opened it. Okay, so let's say you opened it at midnight. There's a high likelihood that your trade would have hit its stop loss or take profit or its stop loss within 1 hour, by 1 a.m. Okay. Similarly, if you trade, after 10 p.m., right? It looks like if you set a 10-pip stop loss, you'll hold on to your position for an hour, maybe an hour and a half, if it hit its stop loss, right? If it goes against you. Now, let's contrast that with a person who's trading a 10-pip stop loss at the current time, which is 2 p.m. London, right? 9 a.m. New York. With a 10-pip stop loss, which is, somewhere here, you're way out of the current price volatility, expected price range volatility for this time of day on Euro USD. So what's going to happen? You're going to get into a position, you're going to set a 10-pip stop loss, and within a matter of minutes, you're going to get knocked out of your position. And I hear it again and again and again, almost every day of my life. And I hear this complaint at the Financial Commission, which I'm a member of as well. The number one complaint we get there is, my broker is chasing my stop losses. And this is what traders are saying. I'm setting my stop loss. The price of the instrument hits my stop loss. I get out of the position. It closes my position, and then it goes back in the direction that I initially forecast. I hear it again and again and again, and there's nobody else to blame other than yourself if that happens to you. There's no need to run to the regulators or complain and start suing the broker. The broker cares less about, I promise you, the broker cares less. These guys make so much money, they care less about chasing your $100 trade. They don't care about it. Most of the brokers these days, they don't even make that money for themselves. They pass that trade on to the banks and the liquidity providers. I promise you, they're not chasing your stop losses. You as traders need to start setting stop losses which are appropriate to market conditions. So if you decide for some reason to trade euro dollar with a 10-pip stop loss, you should only be trading between 10 p.m. through to 6 a.m. the next morning. If you are in Europe and you wake up during a normal time of day, right, between 7 a.m. and 7 or 8 a.m. Through to 5 in the evening until the markets close, then you should not be using a 10-pip stop loss on euro dollar, right? Let me show you what you should be using. Okay, so if you're trading between 7 a.m. and midday London time, okay, or between 4 p.m. 3 p.m. to 5 p.m. London time, you should be using approximately I would say, if you're planning to only hold your trade for a short period of time, right, for 1 hour, you should be setting your stop losses at around 20 pips. Okay. If you're planning to set a long-term position, right, then you should obviously be setting your stop losses and take profits way higher than that, and I will show you what I mean in just a moment. If you're trading during European hours, right, the ones I'm highlighting now, 7 a.m. to 7 p.m. London time, and you think that a 20-pip stop loss is going to be enough for you for that entire period, you're wrong again. Because when the US opens, the volatility increases dramatically. Okay, dramatically. Almost doubles. And you need to take that into account. See, if you open a position, let's say during London time at 10 a.m., let's just say, for example, and your position is still open by the time 1 p.m. hits, boy, you better have a relook at that position and the exit levels on those positions, just to make sure that you don't get knocked out due to volatility, because that is the worst thing to happen. If you make the wrong call, right, markets always move against us. Okay, I mean, you can never make the right decision, always 100% the right decision. You're always going to be making losing trades. But what you want to avoid is making losing trades based on ignorance, right, and apathy, right, of not actually taking care in your trades. If you make the wrong trade because you just made the wrong forecast, then so be it. That's fair. Fair is fair. Okay, but what you don't want to do is you don't want to get knocked out just because the markets, you know, started getting volatile and you didn't take that into account. So let me erase all my drawings on my screen. And what I'm going to do is I'm going to scroll down the screen a little bit, sorry, up the screen a little bit, and I'm going to show you a different chart that you can also find under the volatility analysis section. At Autochartist, we call this chart the trumpet for obvious reasons, because it looks like a trumpet. Okay. Now what this graph tells you, okay, is the expected price range movement for the selected instrument at that time of day that you're currently in. So right now we are Thursday, 2 p.m. London time, okay? And Autochartist now provides us the price range forecast within which it believes the next hour is going to trade. So within the next time range is going to trade. So here's the 15-minute forecast. So between 124.45 and 124.68. In the next 30 minutes, Autochartist believes the volatility will be between 124.42 and 124.71. For 1 hour, between 124.36 and 124.77. So if we contrast that to what we're looking at the bottom here in the movement per hour of day graph, this graph only shows you the hourly movement for every hour of the day. Right? The graph above shows you the expected price range movement for the current day of the week for the current time of day, but obviously for more types of time intervals. So if you want to hold your position, a Euro USD position that you've opened now or you have opened now for more than the next 4 hours, then you should be setting your stop loss or take profit not within 124.19 and 124.94. You should be setting your positions, your exit levels higher or below those levels, okay? Which is you know, depending on the direction that you're going in, right? So these graphs here again are non-directional. That means we're giving you an expected price range movement, not a direction. Right? That's very, very important to remember. So if I'm opening euro dollar right now, and now I want to hold my position for over a day, do you think I should be setting my take profit and stop loss at 120, 124.94 and 124.19 for over a day? No, I should be looking at the daily graph. If I want to hold my position for more than a day, let's say this is a long-term position, that you identified either using Autochartist chart patterns or your moving average or your RSI, whatever it is on daily candles, and you want to hold your position for a day or two, then look at the daily volatility analysis, right? Look at, you should be setting your stop loss and take profit below 124.03 and above 125.10. On the other hand, if you're saying, hey, I just want to get in and out of the market really quickly, I think the market is going to spike up or down, but I want to set my position now, and by the time I get into work in 30 minutes, I want my position to either have won or have lost. Right, be in and out of the market. Then you should be looking at your 30-minute or your 1 hour time frames. Right? So to give you an idea of where the volatility, where the price is going to be within the next 30 minutes and the next 1 hour. Before I carry on and show you some practical examples, I wonder if I can prompt Errol and Yvette to let me know if there's any interesting questions that I can talk about right now before I move on to my MetaTrader and show some practical examples of what I mean.
Hi, Len. Yes, maybe you can just explain how the the times are on the chart, the graph that you had before. How does Autochartist show the different hours? There's just a few questions about that.
Sorry, Errol. Maybe you can maybe you can just rephrase the question. What do you mean by how does Autochartist show each
Okay,
hour?
so you have the hours of the day at the bottom there.
Yes.
What are those hours of the day? How does Autochartist put that on your web platform, as opposed to someone
Oh,
in the USA or Japan? Would their hours be different?
okay. Yes. Right. Okay. All right. So you're asking me a time zone question, if I'm understanding correctly.
Long-winded, yes. Time zone.
So sorry, Errol, I missed that. Is that correct? A time zone question? Okay. So my Autochartist is set to Europe, London. Okay. So the hours of the day that I'm seeing over here are for London time. Okay. If I change my time zone to, let's say, let's choose America, New York. Okay. Then I can log out and log back in. Now I'm set to America, New York. Excuse all the clicking around. Let me look at that same graph. Euro USD for America, New York. Okay, here we go. So now you will see that my graph has shifted to the left. Now all my times, the hours of the day, are in New York time, right? So you can see that the volatile time for New York, at New York time for Euro USD is 8 a.m., 9 a.m., and 10 a.m. New York time. I hope that's answered the question.
Yes. Okay. Thanks, Ilan. Okay, we have a question from Mike.
Okay.
He says, is there a way to see the expected range for 2 standard deviation range instead of just one? Maybe a multiplier of the range, or just use the next higher time frame range as an estimate?
Okay. Okay. So that is a great question, and so I would like to first thing I'd like to do is I would like to translate. I think it was Mike's question for everyone, because not everybody might know what a standard deviation means. So one standard. So everybody I think knows what the average or a mean is, or the average of a movement is, right? It's the arithmetic average of all the movements added together and then divided by the number of movements. Now, a standard deviation, one standard deviation says is a description of approximately 67% probability of the price moving in that range. A two standard deviation would result in a 98% probability of the price being in that range. Now, Mike, if you're looking from a statistical perspective, what where two standard deviations would be, we don't display that because it's a little bit complex for most of our viewers and audience and users of Autochartist. Certainly, the one standard deviation provides enough information. But what I would do is I would almost map half of one standard deviation. So if this is half of one standard deviation, I would map that onto the end to get to get two standard deviations. So if you ask me for what is the price range movement of Euro USD at 8 a.m. New York time within two standard deviations, which means a 98% probability, that would be between a 12 pips stop loss approximately and 40 pips, between 12 and 40 pips. So that would be my next best guess, just from an approximation perspective. But that's quite a complex question, obviously.
Okay, thanks, Ilan. We have a question here from Dr. Ubeta. I'm sorry if I pronounced that wrong. He says, do you provide weekly volatility too?
No, we do not provide weekly volatility. We only the longest one we provide is a daily volatility.
Okay. Fabio is saying, what is the accuracy of these levels?
Oh, the accuracy of these levels is there. It's actually by definition the accuracy of these levels is about 67%. So that means that what Autochartist has done is that we go back for looking at 6 months worth of data for every hour of the day, for every day of the week, and we aggregate the data for the last 6 months, and that's how we base the levels, and then we show you with a 67% probability of the price range. So it is an absolute statistical fact that these are 67% accurate.
Okay, great. John is asking, when is the expected move data updated?
This price range forecast here, I'm guessing that's what it says. So it's updated every 15 minutes. So did you say it was John, Errol? Was that the name that asked? I think it was John.
At 4:17 there.
So if you recall, a few minutes ago, when I first started this presentation, it was 9 a.m. New York. Now it is 9:15 a.m. right? So we have now shifted our graph by 15 minutes, and we're now on a 9:15 forecast for euro dollar. So every 15 minutes, this trumpet is updated. The movement per hour of the day is updated. I think it is once every week. On the weekend we update it because it's pretty static data. But this trumpet we update every 15 minutes. You get a new graph. Now what you'll find is that this graph looks similar to this during volatile times of day. When during non-volatile times of day, what you find is the graph is really, really thin at the start of the day. In fact, normally, like let's say for euro dollar, when it's non-European hours, you find that the 15-minute, 30-minute, and 1 hour graphs are almost identical, and then it increases rapidly. So you'll find a different shape as the time of day changes, but it's very subtle, and every 15 minutes that goes by, the shape changes slightly.
Okay, great. Maybe we'll take one more question for now.
Okay.
Steve is saying, so are you saying we should choose a pip target that is not within the green selection area?
I am not dictating to you what your trading strategy should be. I am merely saying that you should try not get stopped out because of pure market noise. Everything that we're trying to do as traders is to avoid noise, right? And to avoid, trying to get knocked out by noise. Everything we try to do, we try to filter out the noise and try to identify trends in the market and reversals. That's all we try to do in the market. That's what everyone does, 100% of traders. Right? Some of us do it visually. Some of us do it using tools like Autochartist. Other people use statistical methods like non-linear regression methods to try to avoid noise. Everyone tries to avoid noise. And the one thing you don't want to do is you don't want to get knocked out by noise. So I think that it all depends as to how long you're trying to hold your position. So if you want to hold your position, let's just say we want to take a position on euro dollar right now, and you want to hold your position somewhere between 30 minutes and an hour, then this little purple range that I'm drawing for you now is where you should be setting your stop loss and take profit. If you want to hold it for between 30 minutes and an hour. If you want to hold your position between an hour and 4 hours, then this little range that I'm drawing for you now is where you should be setting your stop losses and take profits. If you want to hold it for more than 4 hours and less than 24 hours, then that is the range within which you should be setting your stop loss and take profit. So I cannot dictate to you where you want to set your stop loss and take profits. I cannot say you must set it above or within your the green areas, right? Because above the 30-minute area could be within the 1 hour, or above the 30-minute area could be within the 4 hour or the 24 hours. So I cannot tell you above or below, right? But certainly I think you need to keep in mind what you're actually trading. So if you are trading a 1 minute graph on Euro USD, okay, then are you going to set a stop loss and take profit greater than your daily volatility? Probably not. Okay, if you're trading 1 minute graph, if you're a high frequency trader trading 1 minute graphs on your, with your broker, then you're probably looking to hold your position somewhere between 15 minutes and 30 minutes. In which case, you should be looking within this left-hand side. This ranges between 15 and 30 minutes. If you're trading 4-hourly graphs and daily graphs, then most certainly you should be setting your exit levels way out of the daily expected price range movements. Okay. Should I move on, because we're almost out of time? I know everybody that listened to me before, I like to try and keep my webinars to under 30 minutes. So let me quickly move on to MetaTrader, which is a package that many of you use to trade. I know there are some other commodities traders here with us and stock traders, but at least I want to show you a practical example of what that looks like when you're actually trading. So on my screen right now, I have a graph of US dollar JPY, and I'm actually going to remove all the chart patterns and key levels and all that stuff, and I'm just going to keep my volatility. Now, if you're using MetaTrader, then you can just take this Autochartist volatility indicator that's on the left-hand side, and you can drag it and drag and drop it onto your MetaTrader, and enable DLL calls. Okay, obviously don't forget that. And then what you should get is this trumpet that I was showing you before. You'll get this trumpet exactly on your screen, and you can see that quite clearly, right? That you can see the next 30 minutes volatility between those two lines, the next 4-hourly volatility, and the next daily the volatility for the next 24 hours. Now, it's interesting to look at these numbers visually. Let's just say, for example, I want to take a short position on dollar JPY, right? So I think the dollar is going to devalue against the Japanese yen, and I want to set a stop loss and a take profit. Now, we notice something quite interesting, that sometimes these expected volatility ranges correlate exactly to what we visually see as support and resistance in the market. So you can see that from a daily perspective, we're almost at the peaks, right, of where the price has touched before. Right? If we look at the daily volatility on the short side, again, it looks like there's strong support and resistance at this level. Support over here, resistance over here. Very interesting. These are very important levels for us. Right, you can clearly see that. I mean, it's actually uncanny how accurate these levels are. If you're looking at a 1-hour graph or a 4-hour graph, again, you can see a lot of consolidation at these levels. Right? I mean, all you got to do is you got to just look back in time and see how much support and resistance there has been at those levels. Right? So it's not only about the numbers, right? It's about actually looking at the graph and saying what makes sense, right? So I think was it Mark or Steve that asked that question just before this? Are you saying I should set my stop losses and take profits out of the market, or out of the green zones or in the green zones? Let's look at this. I mean, let's actually look at this example now. Let's just say I want to set a stop loss on a short position on US dollar Japanese yen. Where would I set it? Okay, so would I set it here? Well, if I want to get knocked out in the next hour, yes, I would. It looks like I'm trading a 1-hour graph here. So no, maybe this is too quick for me. So what I want to do is I want to maybe set it higher up, but there doesn't seem to be anything significant here. So if I set my stop loss to be around this level here, okay, 115.90, then I can expect even if it goes the wrong way, I know that I get knocked out because the market moved against me, not because of noise, right? Because I'm setting my stop loss out of the market noise. I can see it clearly, right? So, and I'm expecting, if it moves against me, for my stop loss only to get hit between 4 hours and 24 hours. So now I know, okay, I'm saying to myself, Ilan, looks like you're going to be holding this position for the next 12 hours, 12 to 24 hours, right? If it goes against me. Do I have enough capital to take more positions, right? I'm going to be holding this position. Am I overexposing myself on the capital side, knowing the amount of time that I'm going to be in the market? I only have, let's say, $1,000 in my account, and I want to set 5 different positions. But hey, I'm going to be locking myself in here for the next 12 hours, right? Maybe I need to reduce the amount of exposure that I have for this trade that I'm about to perform. Okay, so there's a lot of very interesting things that come out of actually looking at a practical example and looking at the graph before you're actually setting your stop losses and take profits. Errol, with that, I actually want to conclude. Now, I wonder if there's any more questions that I can answer. I hope everyone understood. Maybe I should actually do one more example. Errol, what do you think? Should I do one more example?
Yes, there are 1 or 2 questions, but maybe one more example would help.
Okay, let me open up euro dollar. I'm just going to erase everything. I'm erasing all the Autochartist indicators because this webinar today is not about Autochartist trade opportunities. We've got plenty of webinars about that. I specifically want to focus on on the support and resist on the volatility analysis. Again, this is a euro dollar chart of 1 hourly graph. And again, let's just say I want to go long, right? I want to buy euro dollar. Where would I set my stop loss? Would I set it at 124.36? Maybe I would. I'm looking at support and resistance here. Certainly something happening at that level, interesting level for me, no doubt. I'm trading a 1 hour graph. Maybe no, this is too volatile for me. I'm going to set it lower. I want to set it at 4 hours looks interesting because certainly it looks to me like that is out of the current market volatility, right? From a take profit perspective, I mean, you don't need to be a rocket scientist to see this or an expert technical analyst. You can see where the volatility is, right? The current price range movement. It's somewhere between 1 hour and 4 hours, right? So if you're looking to set a take profit, you could be looking somewhere at the 124.95 range. And that'll hold you in your position for the next hour or 2 hours, somewhere between an hour and 4 hours, somewhere in the next 2 hours. It's bound to hit that level. Okay, and again, you can see how important those levels are based on the graph going back. And now, of course, as I mentioned before, you can actually choose your exposure level. So now I'm holding my position somewhere on the short side, between just over 4 hours. On the long side, just under 4 hours. So I can start thinking, okay, I've only got $1,000 in my account. I want to place a lot of trades. I'm only going to expose 1% of my equity to this trade, so that I can actually have enough equity to open up for all the other trades for the next few hours. Okay, I think with that, I'm going to conclude. I'm going to take a few last questions, and I'm sure everyone's got better things to do today than listen to me. So, Errol, hit me with a few questions.
Okay, Cole is asking, I assume this volatility can't take into consideration news events.
Carl, you're completely correct.
Okay.
It does not take into account news events at all. Yeah, anyway, I won't go into that right now. We have other tools to do that, but this does not, no.
Okay. Steve is asking again, is there a way to keep the Autochartist from auto-loading on all the charts when I open them?
Yes, most certainly. Steve, all you do is you go into the template screen that I'm showing you now. You go to remove template, and you remove one called default. Oh, I don't have it here, but there's one called default. If you have one on your screen, you delete that one. Here it is, default. Delete that, and then it will not load the Autochartist goodies anymore. Or if you want even better, you can select the indicators you don't want, delete the indicators you don't want, and then go save template and overwrite the default template. And then it won't show anymore. But certainly for questions like this, please drop us an email to support@autochartist.com, and we'll help you get those, sort out those kind of questions.
Okay, Wilson is asking, are able to identify the POC, point of control, in this tool?
I am not quite sure what that is.
Yeah,
So
I'm also not sure.
I guess the answer is no. I'm not quite sure what that is. I'm sorry.
Okay. Yeah, I think that's all the major questions.
Okay, good. Thank you, everyone. I won't hold you anymore. I'm already 7 minutes over my allocated time. I really appreciate you all coming to listen to me today, and I hope you've learned something new. And please, I don't want to see any of your names popping up at the Financial Commission or with disputes with brokers because of brokers chasing your stop losses. Focus on setting market appropriate take profits and stop loss, and you won't have any issues.